Good morning. Welcome to my Forex and market analysis for 31st of July, and it's Friday today. So, we have been getting really good trades here. Um, on Wednesday, we had bearish short here. On Thursday, we had a short, and on Friday as well. I'm expecting market to go to the downside. We're clearly in a downtrend, and price is giving lower lows and lower highs. Just lower lows and lower highs. That's it. For me to Um, so let's start the analysis by looking at drawn liquidity. We had this drawn liquidity earlier on where I was expecting price to reach, and we clearly break through it. And even on daily time frame, we are in bearish trend right now. Next drawn liquidity will be this, which is really far and we don't need to look that far. If I look at 4-hour time frame, we have a bearish fair value gap, and I'm expecting price today to the daily candle to open high, low, and close. So open, high, low, close, which is here. Open, high, low, close. For that, we have expansion, pullback, and expansion again. So as in my yesterday's video, I said we have a fair value gap, which is our point, which is our zone from where I'm expecting market to continue expanding. Now we need to look at a point. So the point will be an hourly swing point. So this is an hourly swing. And does it look familiar? Yesterday as well we had a zone which is 4-hour fair value gap, and we had a swing point, and then market reacted from the swing point. And today we have a fair value gap, same as yesterday. We have a swing point, same as yesterday, and I'm expecting price to react from this, same as yesterday. I know it's Friday today and last day of month. There won't be such huge volume, but I'm expecting it to at least reach to this level. So if I could get a trade, let me draw these level again. So if I could get a trade from this will be my sweep point. If I could get a trade from this area with a stop loss small enough so I can target these drawn liquidity, then I think it's a good risk to reward trade. And we have Asian session open. What I'm expecting price to do three things. First, price to open in London session, sweep Asian liquidity, which is this high point as of now, sweep the hourly swing point, which is this point as of right now, and tap into the 4-hour zone from where I'm expecting price to go to the downside. So we have this zone, this point in price on this axis. Um, so let me clear this. We have two axes on charts. One is price, which will be this axis, and one is time, which is this axis. So for price, I need a point from where I'm expecting price to react. So the point will be this. If you look here, it's 100.235. That's the price point. I also want same from time standpoint. So the time point will be after London Open, which is this. So if we have this in Asian, which is price just moving sideways, London opens at 11:30 a.m. IST, and then we go up. We sweep Asia high, we sweep swing point, and we tap into fair value gap, and then we push to the downside towards the drawn liquidity. So we have point and we have time, which is called time and price. So overall, I'm bearish on DXY. Now let's look into uh, EU. Again, EU, really good trades. We had a long here, we had a long here because market is expanding right now. So it's just making high rise and higher lows. It's clear that the trend is to the upside. Why? Because high highs and high lows. Also, we have multiple bullish fair value gap and no bearish fair value gap. There's no bearish. We have expansion pullback, expansion pullback. What am I expecting today? Is there any drawn liquidity? First look at that. We had this drawn liquidity, which yesterday we broke out of. And as of today, this is the drawn liquidity, but it's really far. So no need to look that far. So we will use yesterday's high as a drawn liquidity because again, it's Friday. I'm not expecting price to move a lot and I don't want to hold my trades over weekend. So I'm not expecting price to go really high. I'm just expecting to enter in a quick trade and then get out. So we have a drawn liquidity. We have a bullish fair value gap. Sorry, bullish fair value gap from where I'm expecting price to react out of. Now it's a zone. It's a really big zone. I don't know from where the price will react. It could react from here and go up. It could react from here and go up. It could react from here and go up, or it could break and react and then go. So for that, I need two things. First will be hourly swing point, which is this. So we have a swing point. And the other good thing is we also have an hourly fair value gap, which also coincides with the swing point. It's really powerful and it's really high probability setup as of right now. We are in Asian session. So same as yesterday, if you could look, we had this was 4 hour zone. This was our swing point. We were in Asian session, London Open. We sweep Asia, we sweep the swing point, and we tap into fair value gap, and then we push to the upside. The same I'm expecting from price today. We're in Asian. We are really far from the swing point as of right now. So what I want is either in next 2 hours we go low and close somewhere here. Then let me mark this. Then London session opens at 11:30 IST. So like this. Then London session opens. We sweep, we go down first, we sweep the swing point, we tap into fair value gap, and we sweep the Asia liquidity, and then we push to the upside. So this is one scenario. Or the other scenario could be we go sideways in London, and then New York session opens, which is 17:30 IST. So we stay sideways till here, and then New York session opens, it goes down, take out Asia liquidity, take out London liquidity, take out the swing point, and tap into fair value gap, and then push to the upside. So this is what I'm expecting price to do. I will be careful taking trade in New York session. The reason being there's not enough time for price to go up because within 4 to 5 hours the market will be closed. So if I'm taking a trade somewhere, something like this, I don't think my take profit will hit before the market closes. So I will be careful. But if I get a trade in London session, then I can hold it till night or something like that. So again, Asian session, if it closes like this, London opens, sweep, push up, take a trade. If not, London is sideways, did not sweep yet. New York open, sweep, go up. This is price. So the price I want to sweep is 1.14988. So let's set an alert here. And the point and the time I want market to sweep is uh, either London open or New York open. So it's a clear long. and I have set alert. There is no setup before this alert goes off. So no need to look at markets before we hit this point in time and at these times specifically. Next is Geo. Daily, clearly in an uptrend, we had a change in state of delivery. We had bullish candle open, go low, high and close. But I'm expecting today open, low, high and close. If I look at 4-hour time frame, yesterday I took this long in Geo. So I trade something like this. My entry was on 5 minute, but this is a rough what I'm uh, drawing what the price it was. As you can remember from yesterday, I said this was the swing point, Asian liquidity, London open, sweep, we go up, and then take a trade here. We get a sweep of hourly swing, we tap into 4-hour fair value gap, and then we push to the upside. If I look at today's price action, um, we have expansion, pullback, expansion. What will price do next? Pullback, and then expansion again. And on daily, open, low, high, and close. So we have a zone on 4-hour where I'm expecting price to react from, which is this bullish fair value gap. Now, price can react from here and go up. It could go up from here. It could go up from here. And it could go up any time from now till the day closes. So we need two things. We need a price, which is this axis, and we need time, which is this axis. So let's go on hourly time frame. Where is our swing point? The swing point that I see is this. And which also coincides with an hourly fair value gap. So it is really high probability setup for price to react from here and go up. But we are really far from the sweet point as of right now. The Asian session is really far. So if everything goes well, what I want is Asian like this, then London to sweep Asian, also to sweep the swing point and tap into the 4-hour fair value gap, which is this, and then close back into Asian session. So in this case, if price stays here, my trade would be something like this, which is just a bad risk to reward. And also it's Friday today. I don't expect market to move a lot. So what's the best thing we can do? First, let's mark time, which is 11:30 in the morning and 17:30 in the evening, IST. And then let's say this is Asian session, it closes like this, somewhere like this. Then London opens and London starts and goes like this. And then New York session opens at 5:30 and then we get a sweep and then we get a close up. And then I can take a long position from here with a small stop loss and aiming this drawn liquidity, which is the 4-hour high. So we had a trade like this. Um, let me find the example. Is it this one? Oh yeah, this one. So the trade on Wednesday, we had this zone. We had the Asian liquidity sweep. We also had the swing point, which is this. Asian, we went up. London, we did not do anything. New York open. We sweep everything we wanted it to, and then we push to the upside. So the same kind of thing I'm expecting from GU because it's really far from the price point that I want to react it to. So the best thing would be Asian closes somewhere over here. London opens, and then New York open. We go low, sweep the swing point, tap into fair value gap, and take out the London session liquidity, and then push to the upside. So this would be my plan for GU. I think Geo only could give a trade in New York session, not in London. But it's possible that you can give a trade in London session as well. And DXY is really close. Let me also mark 1730 here. Yeah. DXY is really close to, it had already swept the hourly sweep and fair value gap. So we are already into this. What DXY needs to do is open here, go up, and then go down. So if DXY does something like this, then EU will for sure go down, sweep, and then go up. So you cannot trade DXY. That's why I don't set alert here. But you can use the theory of how DXY is going to work because 70% of trades in weightage of DXY is EU and GBP USD. So majority of what they do will reflect on DXY, and what DXY will reflect on these two. They're highly correlated. So I have my alert set. I know the times. I won't look at the charts before I get an alert notification. And if I do, I will look, okay, how big will be my stop loss till the draw liquidity? If I get a trade something like, let's say like this, and my target is this, it's not worth it. It's a 0.3 RR. What I want is something like either like at least 2 RR or like 3 risk reward at least, something like this. So that's it. Longs for both. We have uh, we have time from at which point I'm expecting price to react, and we have price. There's nothing else to consider about, and we have a target as well till where I'm expecting price to go. That's all. Thanks for watching. Have a wonderful day.